XLC stock. This is the Communications Services ETF out of that sector for the Spider Select Sector ETFs. I look at all 11 of these. I kind of track the whole broader stock market and kind of keep an eye on things. I wanted to break down XLC stock because it's wildly divergent. Mostly it's higher year over year. But there are some stocks that are really powering this. There are other stocks that are keeping things lagging. Given that, when you sort of sift through, you can find a few gems here and there. And I wanted to show you some of the data points that I look at that kind of help to sort of show what's going on within XLC stock and what could potentially be a bigger opportunity. In the meantime, again, some of the bigger stocks that are in here, and I'll show you those in just a moment, those stocks really propel XLC stock more so than others, which some are negative. Let's jump in. Saw this article pop up, and I've been doing a lot of the Magnificent Seven stocks, kind of looking at them. They've all just most of them have basically just reported earnings. Some of them are quite good, and some of them weren't as good as expected. Nonetheless, there are a few that are actually in XLC stock, and I wanted to kind of point that out. I follow SMH and XLC stock. I don't actually know from this particular article, Zacks. Zacks does a pretty good job of. I follow Zacks often because they look at pretty much the same things I look at: revenue growth, earnings growth, and from that I prioritize earnings to determine if a company is a value investment. Here we're looking at XLC stock, the Telecommunications Services ETF. Again, Spider Select. They break down all 11 sectors within the stock market and answer the question of, there's 19 stocks in this, and I'll show you this in just a second, what's going on there. You can see the most recent moves. We just had XLC stock drop a little bit, then shoot back upward. That shooting back upward, Meta, and a couple others. These were really kind of driving things more so than others. Now, here is a pretty good look at all of the stocks in XLC stock, the Telecommunications Services ETF. What I have here, one share. I do not weight this sector with this ETF. I just want to know which each share is worth. I look at the forward 4 quarters, add that up, divide over the current price, and you can see the breakdown that I have here. You can also see the 4 future quarters added up, then the yield. That gives me the idea as to which stocks potentially are undervalued, which stocks are potentially overvalued, and then the year-to-date change. And now, the chart I looked at, this is a little more year-to-date. It's about 15 months or so, 14 months. Nonetheless, I kind of broke down where the stocks were comparatively, and as you can see, dead smack in the middle there, Meta stock, Meta Platforms, that stock, 351% increase. Not far behind it, Netflix, 118%. Google's in there, 63%, not nearly as much. Comcast was a pretty solid number, and then News Corp was there. But then the rest of them, you kind of break them down, and you can see that there are some that are sort of lagging. Year to date, Disney. Now, Disney, I think, while I'm recording this, right this moment, I think Disney is releasing their earnings. It's either today or tomorrow. Disney has a yield of about 4.739%. And if you look at the next 4 quarters, that's $1.27 in potential earnings for the company. Now, if you kind of go through here, you'll see there are a couple: Paramount, Disney, those Warner Brothers all the way down at the bottom, which is negative as well. These companies haven't been seeing a whole lot of love. Their business models are somewhat flawed, and we're seeing a lot of these companies shift. People aren't going to the movie theaters as much when you can just sit at home and stream Netflix, which is right there. Interesting how things have shifted like that. Nonetheless, When you're looking at, say, a Warner Brothers or a Disney, now Disney yielding 4.739%, that's future earnings. What would they do with that money that they earned? And this is for a value investor, something that is really important. Now, Disney took a pretty big hit in 2020. I kind of looked through their numbers here fairly recently. Disney took a hit through 2020, obviously, when theaters shut down. They've had to retool everything and are, at this point, kind of building back up. Disney stock itself has fallen out of favor. But if you take a look at, say, Disney's continual revenues, they're increasing year after year after year. Projections from the analysts are that we see continually increasing earnings and revenue. That was Disney. EA may be has barely moved 2.4% over the course of, say, 14 months with another yield of 4.2%. Not seeing the growth that you would versus, say, Disney. So one of the things that, as a value investor, that I'm really sort of kind of looking for is to answer a question. What can I reasonably assume about any one particular stock? The very first thing I look for is revenue. If we see revenue going up, down, sideways, whatever direction, what can we reasonably assume from that? I don't know. That particular revenue picture isn't exactly clear. But when you look at the next couple years for, say, Disney Corporation, or in the case of Meta Platforms, up 351%. Meta stock, if you look at their revenue, continually increasing. Earnings doing exactly the same. But this is after they took a hit in 2022, I think it was October, November 2022, when after investing heavily during the pandemic shutdown, they didn't really see the results they were looking for, and they had to come in and cut costs. Since then, you can see what happened with Meta Platforms, the stock up 351%. And that's really kind of a big deal, that when you can reasonably assume, looking at these earnings, that we're going to see continually increasing earnings and revenue from Meta stock, being able to answer that is really important. Netflix, another one. A little overvalued in my book, but continually increasing revenue, continually increasing earnings. So if you are going to break these down, looking at any of these particular stock should be the first thing you're looking at, those bar charts. What do the bar charts look like for revenue projections? Are they increasing? Because then we can reasonably assume that, yes, this should continue. That's how the company functions. Earnings as well. Looking at, say, Verizon, looking at AT&T, not so much. And so although there may be some value tucked in there, there isn't the growth rate that other companies are producing. And I think that's an important indicator when you're kind of comparing these companies. I break down these sectors on a regular basis, looking at these ETFs. This is XLC stock. Of course, the Telecommunications Services ETF. There are some stocks in this ETF that are doing very well. Others are holding everything back. There is a heavier weight in certain stocks versus others. That's why I put together this with just one share, just to have a better understanding of each individual stock within the actual ETF. If that's the kind of content you're looking for, make sure to hit that like and follow button. I try to take a pretty solid look at each ETF once per quarter, give a good broad breakdown as to what's going on within the sector. Hit that like and follow button. See you in the next video.